let's talk a bit more about what's going on in the markets these days. For more on that, we're joined by Seema Shah. She is the chief strategist over at Principal Global Investors. Seema, great to speak with you once again. I'd love to begin with your thoughts on how you're thinking about the end of this year in the context of everything that happened this year. Certainly everyone wants to know what happens next year, but is there any kind of simple way that you're trying to contextualize all that's gone on in 2020?
Yeah, it's been a tremendous year. But if you just back at the beginning of the year when markets started to price in a full-blown global health catastrophe, and I think what happened is that investors who'd become really accustomed to years of low volatility and high returns were suddenly confronted with a really ferocious episode of volatility. And I think back in March, we would never imagine that we would see markets back at the kind of year levels, and if not at record highs. But I think what we've learned this year is that the power of central banks should never be underestimated. And once you have government stimulus also in play, there's a pretty hefty punch that policymakers can give.
And Seema, policymakers can limit downside, but how much, I guess we've seen in real time how much they can help upside. But I'm curious on a corporate level, how much all of this is going to end up contributing to earnings going forward. How do we need to, and what do we need to pay a special attention to when it comes to earnings and earnings growth going into 2021?
Yeah, it's an interesting one because I think what we are anticipating, what the market is anticipating is an earnings recovery next year, which makes sense. I think that the question is around timing. So we still have a little bit of concern around the beginning of the year. And that's because, as you said, what's important is, are companies going to go back to normal? Are they going to be able to operate as they were? And will they still be facing capacity constraints? And the vaccine news has, of course, been positive, but there's still a lot of question marks. So to us, it means that the first quarter of next year, you still have a number of capacity constraints for most sectors. So earnings growth will still be under some pressure in Q1, certainly better than what we saw this year. And then we just want the growth recovery to really accelerate as we get into the second half of the year, to the point that earnings growth is then validating valuations, which we already know are very extended.
And there we have the opening bell on Wall Street at the New York Stock Exchange. Definitely a little bit less exciting today than the raucous openings for the past few days between Airbnb and DoorDash. Delwinds, never heard of them? Definitely not as cool as Airbnb or DoorDash. Seema, I want to stay on the IPOs here. The market reception really has been absolutely tremendous. How concerned are you that how the market has responded to an Airbnb, a DoorDash, what is it, a C3.ai, whatever they're called? Is that a sign of a market top forming?
No, I don't think it is. I think what we're seeing is that, one, investors are looking through all of the concerns over, which may be pressing markets for the next couple of months, and looking through to the other side when hopefully there's economic normalization. And that's what they're looking. That's why they've got that almost exuberance about them. But also these specific IPOs are for companies which are part of life going forward. We talk about life going back to normal, but some of it, that what we've experienced this year, will stay with us. And I think a number of the companies that we've seen with the IPOs this week, they are companies that have evolved this year and have almost, kind of normalized what will happen and will continue to be part of our lives going forward. And I think that's what we're seeing. So to me, it's not a concern of a bubble or a market top.
And I guess, Seema, in thinking about, part of life and this normalization trade that I think markets are anticipating, embedded in that, are you concerned that if there is a slowing of, how quickly vaccines roll out, or even if just there's a disappointment in, let's say, first quarter, second quarter earnings, will the markets penalize that because so much optimism has been pulled, optimism around next year has been pulled into returns in 2020?
Well, I think what we're likely to see, and I think we've seen some of that this week, is there's a bit of a reality check going on where markets are saying, okay, show me what the logistics are. We want to know what the reality is of these vaccines. So I think that over January, February, there's going to be good news along the way, but the market is going to be somewhat tempered in the way that they respond to some of that good news. So hopefully, none of this is going to come as a complete shock. And ultimately, we think that investors are going to look through all of that noise. At some point, the timing is difficult to say, but at some point within the next year, there will be global mass distribution of a vaccine, and hopefully life will go back to some kind of normality. And I think that that's what we're looking for. But of course, look, there is potential for disappointment, and it's really important that from an asset allocation perspective, you maintain some kind of safety within your portfolios.
Seema, Miles wrote so eloquently in his morning brief newsletter today about this concept of operating leverage, and that has been very much front and center this year. Companies have fired a lot of people because their demand has really fallen through a trapdoor during the pandemic. How concerned are you that, given where valuations are right now, they're stretched 5-10-year highs, depending on what company, that we might see more waves of layoffs in the first half of next year as companies try to justify these valuations?
Yeah, I mean, look, that is a key risk. When we think about we've got a pretty optimistic view for 2021. And when people ask us, but what are the risks ahead? I mean, I think that is the key one, is that, things have been okay because so much policymaker help. But at some point, some companies are going to have to say, look, this has been too difficult. Let's throw the towel in. We're not seeing the progress as quick as we need it. So I think that is a risk for Q1. And I think we should anticipate that the road from here is definitely not smooth. It will be rocky and there will be some bad news along the way. But I just think that investors are likely to look through a lot of that because they know that the big picture at the end of 2021, or at least middle of 2021, is a pretty decent one.